We've always said that blockchain is a solution looking for a problem. Well, it's probably more of a solution creating problems. So we're going to touch on briefly what's been happening in crypto. We'll talk about Bitcoin a bit, including our own position, and then we'll touch on why we're avoiding MicroStrategy stock like the plague. Now, my name is Joe. I founded Nanolyze several decades ago because I thought nanotechnology was one of the most exciting things I'd ever read about. And since then, we've been covering emerging technologies of all sorts, some of which you can see above, one being blockchain. Now, we're managing a portfolio of around 36 tech stocks across all these themes, and we've spent a fair bit of time evaluating each. In the case of blockchain, our most recent piece here, of course, blockchain, a solution looking for a problem, and we concluded that people say, well, you just don't understand the great transformation of Web 3.0. And it's all you hear them say. And they're right. We don't understand why the original promise of blockchain has transformed into something that's entirely unrecognizable and littered with risk. Now, our research has pointed to viable areas of interest for blockchain, such as supply chain traceability, securitization, smart contracts. We've interviewed startups dabbling in real estate, oil, and gas, and we've seen definitely some promising business models. But one of the problems that you have with blockchain, it's described by what's called Buterin's scalability trilemma. This is very important. So you see this triangle here. You have security, scalability, and decentralization. Pick two. And when you can pause the video, spend some time looking at this and thinking about it. And it's very interesting. Nobody seems to be able to solve this problem. And the proof of that is in the absolute tripe out there, the garbage that's being peddled to naive individuals who are being fleeced out of billions of dollars every year. We're going to talk about that, and I like this example here. A company called Compound, backed by Andreessen, mind you, managed to make a one-character mistake in a line of code that resulted in $90 million being given away, after which the CEO begged for it back on Twitter. And, of course, not everybody felt obligated to give that money back. Now, one of the companies out there we covered before that fights fraud in the cryptocurrency world is called Chainalysis, and they put out this 2023 crypto crime report. I don't think any of the other disruptive technologies that we cover have crime reports put out about them, but cryptocurrency is different. So this report here tells you everything you need to know about cryptocurrency-based crime. So I thought we'd touch on a few things. So first of all, they said last year, that was in 2022, was one of the most tumultuous in cryptocurrency history. And they said regarding these large institutions that have allegations of fraud, that these allegations made this year's crypto crime report a bit tricky, as some feel that those businesses should be treated as criminal enterprises, and they've decided not to. They say, we'll leave questions of criminality to the legal system. So all that junk, that's not even in here. So when we look at cryptocurrency value received by illicit addresses, of course, these are horrible things. You have terrorism and child abuse material and scams and ransomware, frauds. But look at sanctions popping up here. So illicit addresses in 2022 received a record $20.6 billion in money. And the concern here is that the government is noticing this. And when we look at the sorts of institutions getting this money, here's the types of firms you see they're involved in. Ransomware, that's a huge problem. Drug trafficking, dark net market, money laundering, hacking, and crypto theft. So upwards of 95% of all hacking now is related to hackers trying to extort money in any number of ways. And Lazarus Group, I learned about them when I was meeting with a cybersecurity firm in Moscow that was tracking them, and they tracked them to this tower in North Korea. I actually took this picture, and somewhere in that tower is Lazarus Group stealing money from people. But we have some excellent news, everyone. So yearly crypto scam revenue is down. It's only $6 billion this year instead of $11 billion.
That's a great accomplishment. Amazing.
And so things are certainly looking up. And we look at the top 10 crypto scams by revenue. You see all the scams here. Maybe some of these names are familiar. Looks like the top criminals were able to get $1.3 billion out of people, I'm sure, across the globe who couldn't afford to lose that money. So lastly, we'll look at this chart here. This shows daily scam revenue versus Bitcoin price by scam type. So we have all kinds of scams: giveaway scams, impersonation scams, romance scams. I think took the cake in terms of volume, investment scams, NFT scams. So crypto is littered with landmines, and that's why we've advised retail investors to stay away from it like the plague. Now, if you want to receive some of the research that we do around blockchain or crypto or disruptive technologies, we don't cover blockchain and crypto that much, but we certainly have been researching technologies like SynBio, AI, IoT for a very long time. Sign up to our weekly newsletter. We'll put a link to it in the comments section. Now, the last time that we looked at Bitcoin's, the possibility of Bitcoin crashing was in December of 2021 in this piece, Why a Bitcoin Crash May Be Imminent. Of course, I have to point there to when the piece was written and what happened afterwards, but you could see there, the lower right, that's the chart for Bitcoin. It's at around $73,000, so breaking new highs. But why this article is interesting, you can go to our site and search for it. It talks about the incredible story of Tether, which is just another great example of how problem-ridden this whole space is. Now, we do happen to be holding Bitcoin. I wanted to touch on that briefly. So our Bitcoin position accounts for around, let's say, 2.4% of our assets. We bought Bitcoin at a cost basis of around $7,815. To reduce risk, we recouped our entire investment at around $42,000. And we're now playing with the house's money, but certainly wary of falling prey to the house money effect. And what we'll do with this position, we use it for diversification purposes, is that we're going to create rules around when we might sell it. And it's as simple as you see our alternative assets there at 10%. Well, if Bitcoin were ever to probably exceed 5% or half our alternative assets, we'd probably trim that. And the reason we hold it, you can see from this chart by Bloomberg that shows how Bitcoin and stocks, the correlation, generally speaking, is positive, but it does go negative at times, in particular when there are problems in the market. So you get a diversification effect. Though I imagine with the surge in tech stocks and the overall market and the surge in Bitcoin, that the correlations are probably pretty high at the moment. But what's interesting about Bitcoin is if you look at the drawdown history over time, we've done that here. So what you can see, I've highlighted 2022. This was a piece we did, I think, a year ago or so, and we were speculating as to when they would see the maximum drawdown and the duration of that, and we left that unfilled. And here we filled that in. So you can see, all right, drawdown. So the 2011 period was 160 days, a 93% drawdown. The next drawdown period, 360, 83. What you can see here is a trend which shows that the drawdowns, so from peak to trough, that duration is extending outwards and the decline is decreasing. And you can just pause this and read through these numbers and see that very easily. This was something that ARK Invest said in their thesis that pointed to Bitcoin becoming less volatile over time. And ARK takes a lot of flack, of course, as anybody that puts their neck out there and invests in companies as an active manager, they're constantly being criticized, and any triumphs are usually swept under the rug. But here you can see where back in 2020, Bitcoin was under $20,000, and they said, well, it could be potentially go up to $140,000. Well, it's halfway there now, and they were saying that by 2025, it would hit that target. So that remains to be seen. But what ARK has done is sort of legitimized Bitcoin, and the fact that you can now invest in Bitcoin via ETFs certainly puts more legitimacy around Bitcoin. Now, we're here to talk about MicroStrategy. When you go to their website here, you see it says MicroStrategy is the largest independently publicly traded business intelligence company with the leading enterprise analytics platform. What does this have to do with Bitcoin? Well, and absolutely nothing. So when we look at MicroStrategy's software sales, so like any sort of software firm, they're driving a regular recurring revenues from their software. Along the top here, you can see charted over the past 12 years that the revenue is stagnant at best and seems to be trending towards a decline. When we look at operating cash flows, those are decreasing and marginally there. But what's going on with investing cash flows and financing cash flows? Billions of dollars are being financed and invested. What's happening there? Well, it comes down to this gentleman here that honestly gives me Jim Jones vibes. So Michael Saylor, you'll see him, he likes to be interviewed a lot, and all he does is talk about Bitcoin. And you can just go to this interview, I think it was yesterday, and it's titled here, Michael Saylor is never selling MicroStrategy's Bitcoin. So I don't know if you're a individual that's invested in MicroStrategy, that should be somewhat of a concern, because he doesn't have an actual plan to harvest returns and return cash to shareholders. But they interview him here, and it's quite interesting. I think it pretty much spells it out in 5 minutes. So he's a Bitcoin fanatic, I think, whose beliefs get in the way of everything. And he says to the person who's interviewing him, well, the end game is to acquire more Bitcoin, when she rightly asks him how he plans to return capital to shareholders. Are you going to sell some and take some profits and give that back to shareholders? No. The end game is always to acquire Bitcoin. Whoever gets the most Bitcoin wins. He's not planning, and she says, you're not planning to sell the Bitcoin at any point, and he agrees. He seems objectively disconnected from reality, and we would want nothing to do with him or his pseudo-software company. And when she probes him on returning capital to shareholders, he says, well, we're just going to buy Bitcoin, and everybody should just buy Bitcoin. Well, cool. That's what we're going to do. So we'll see you later. We're going to go buy some Bitcoin, right? So when we look at MicroStrategy's shares, and this is the key takeaway. So you can criticize Saylor all you want, and putting that aside, if you're trying to value this entity and the premium that it trades to their Bitcoin holding, so they bought more Bitcoin, they're taking on debt to buy Bitcoin, and they bought 12,000 more there for $821 million, so they're increasing their cost basis, and they now hold 205,000 Bitcoins. If you multiply that by $73,500, you get a $15 billion worth of Bitcoin on their balance sheet, but they have a market cap of $27 billion, so there's a very large premium there. And when the interviewer asks him about why people should invest in MicroStrategy, then he talks about how they could invest in ETFs or some other company that holds Bitcoin, fails to mention you can just buy Bitcoin, uses some container ship analogy, talks about leveraging, which is not a good idea. This is a risky enough asset as it is. You don't want to increase your risk. He starts using useless analogies, referring to yield, and this thing has no yield at all because he's not planning to ever sell any. So when you go to value MicroStrategy, they have the $15 billion in funny internet money, okay? And they have a stale software business that barely produces positive operating cash flow. So let's give that a simple valuation ratio of 3. Simple valuation ratio is just market cap divided by annualized revenue. So that gives them a value of about $1.49 billion. So the company should be valued at around $16.5 billion or $973 per share. And the interviewer asked him, what happens if the price of Bitcoin falls? Well, he goes on to say that Bitcoin is the apex property of the human race, the ultimate investment. And the fact that he risks his company on this, regardless of what it is, Bitcoin, gold, anything, is objectively irresponsible and demonstrates incompetence by any sort of measure. So if you're bullish on Bitcoin, then go buy some Bitcoin. You can now access it through ETFs. So we did this piece here on the best Bitcoin ETF. So there's no excuse to have to purchase shares of MicroStrategy anymore. Maybe in the past that was a reason, but of course the purists can do their cold storage thing. And then if you're looking at brokers, I would say choose the one that's publicly traded. You're more likely to avoid all the scams out there because they have to report things to the SEC. Coinbase is arguably the most legitimate broker. So just some concluding thoughts. It's hard to imagine there's retail investors out there naive enough to invest in MicroStrategy. Mr. Saylor may be the executive chairman, but the irresponsibility on display here, it's really very concerning. So if you're looking for a dying software franchise run by a fanatical CEO who refuses to discuss how he plans to return capital to shareholders, then MicroStrategy is probably the company for you. Now, speculators will continue driving up shares of MSTR, but they'll always revert to the price of Bitcoin on the balance sheet, plus that slowly growing software, the slowly declining software business. If you want to hold magic internet money, there's a lot better ways to do that. And I thought I'd leave you with this little quote here. The speculators' deadly enemies are ignorance, greed, fear, and hope, because largely Bitcoin doesn't have intrinsic value, and it's based on lots of speculation. And of course, it can be held for diversification purposes and it's gaining more legitimacy. But if you're looking for quote unquote safe Bitcoin exposure, you probably want to look at some of the ETFs out there, and we've covered those. So watch this presentation next. When you go to the comments, we keep our comments clean, lots of interesting stuff there. Make sure to sign up please, for our newsletter. Thanks so much for taking the time to watch this today.